And so through all of that disruption and turmoil, I realized I was way too dependent on the income from my job. It was my only source of income. And I loved the work that I was doing, but there were so many circumstances outside of my control. And I learned that no matter how talented of an engineer I was or how valuable of an employee I was, if things were not going well at the company or in the industry, that I could quickly lose my job through no fault of my own. And so
All right, guys. Hey, welcome to another episode of the Practical Wealth Show. So today we're going to talk about note on alternative investments, the power of notes, and why they should be part of a diversified portfolio. So I have a special guest today, Fred Moskowitz. And Fred and I just found out in the green room that we're both in the Philadelphia area. Okay.
yeah,
And so go Eagles. Unfortunately, we're both a little bit bummed out, but that's all right. We live to fight another day. Right. So Fred, let me talk about Fred. So Fred is an experienced speaker, author, educator, and he loves speaking about alternative ways to create wealth. He's got a great book called The Little Green Book of Note Investing. And so that's our topic today. I'm gonna let Fred tell you a little more about himself. But Fred, welcome to the Practical Wealth Show. I'm excited to have you.
thank you, Curtis. It's great to be here. Thank you. Yeah, I'll share a little bit about myself, my background. Curtis, I had this great successful career working as a computer engineer. I spent a lot of time working at technology startup companies. And what happened was that I watched my entire industry get turned upside down because we had the bursting of the dot-com bubble,
Mm-hmm.
which was caused so much turmoil. And that was immediately followed by the September 11th terrorist attacks.
Mm.
And so through all of that disruption and turmoil, I realized I was way too dependent on the income from my job. It was my only source of income. And I loved the work that I was doing, but there were so many circumstances outside of my control. And I learned that no matter how talented of an engineer I was or how valuable of an employee I was, if things were not going well at the company or in the industry, that I could quickly lose my job through no fault of my own. And so with that, I came to the realization that I was taking a huge risk by
Mm-hmm.
having that as my only income source. And so I wanted to start to build other income sources and cash flow so that I wouldn't be dependent on the paycheck from my job. And so with that, I turned to alternative investing because as we know, alternative investments are all about investing in assets that you own and control, and they generate income for you. So it's
Mm-hmm.
like you get paid while you wait, while you own them. And that was very appealing to me.
Mm-hmm. Mm-hmm. I love that. And so did you start, how did you, so you saw that? Because a lot of people have that epiphany. I always tell people a job is risky. You can get fired for one of two reasons, any reason or no reason at all. Okay. So I view that as really risky. But was that your first, when you saw, I want to do alternatives, because that's odd. So did it start with real estate and morph into something else? Or tell me a little about
It
that
did.
journey and how
Yeah.
you kind of fell into that.
Yeah, absolutely. It definitely started with real estate. I saw numerous examples of people that I knew, people in my life that built amazing wealth through owning real estate and holding it long term.
Mm-hmm.
And so I said, I can do that. That's something I'm going to get involved in. And I started with that 20
Mm-hmm.
years ago
Mm-hmm.
and got involved with local real estate investment group. And through that, started learning started my education, taking workshops and classes and seminars and reading books. There were no podcasts back then, back at
Hmm.
that time, like there are now.
Hmm.
So we had books, really was the main thing. And something that I saw mentioned in most of the real estate investing books was this idea about notes, how you could sell property and originate a note to create owner financing. And it was really intriguing because it was a way to keep earning cash flow after you sell a property and don't own it anymore. And so after a number of years, through some relationships that I had and through networking, I had an opportunity to buy notes that were originated by a bank.
Okay.
And so when I saw that opportunity, I said, this is, I knew exactly what it was. I recognized that. And so that's what got me started with note investing. And then from there on, I started attending events and conferences specific to note investing,
Right.
which is it's a really niche
It's
niche
really, it's like a,
area.
it's in real estate, but it's like a sub niche that you
It
kind of
is.
follow into. So there's meetings, there's always,
Yeah,
I have a client that does it, and it's like, and then oh, okay, there's a whole little sub universe down here that
there
doesn't get a
is.
lot of airplay. That people are making money. Let me back up for a second because I want to make sure when we say a note investing,
Hmm.
let's, I was looking at your report and you do a really good breakdown of, because people see there are notes all around you,
Yes.
right? So break down what is note investing. What are notes like they would see around them? Because that would give, because once you see that, it's like, oh, I need to get into this game. But I think you
So
don't know what they are.
yeah, yeah, that's so true. A note, what is it? They are all around us. A note refers to a promissory note.
Mm-hmm.
So if you buy a property, you buy a house, you get financing with that. There's going to be two instruments that go with that transaction. It's the note, the
Mm-hmm.
promissory note, and the mortgage. The mortgage is what gives the security interest in the property to the lender, so they have that collateral backing their note.
Mm-hmm.
And so that's those two documents work hand in hand. But a lot of people, especially real estate investors, right? They get involved in real estate. There's so many ways, right? There's single family houses or commercial property or vacation properties, short-term rentals, all these
Mm-hmm.
different categories. And what about talking about investing in the paper,
Hmm.
which is the notes and the mortgages that are associated with those properties, with those transactions? And like you said, it's a really interesting part of the real estate business, but a lot of real estate investors, they don't pay any attention to it. And most people, when they think of a note and a mortgage, they think about being the borrower and not as being the lender. But for individual investors, you can absolutely step into the shoes of the bank and become the lender. When you buy that note, you're afforded all of the rights and remedies that are in those contractual documents.
Mm-hmm.
They're assigned to you, the buyer, and now you step into the shoes of the bank. And what I really love about that is the idea that you transition from being the one making the monthly payments to becoming the one that's receiving the monthly payments.
Yes. Yes. There we
And
go.
so this really increases the predictability of your cash flow as an investment, and that's what I love about it so much.
That's fantastic. Like I had somebody tell me you don't have any tenants, toilets, or termites. Right. So like you're you're
Yes.
you're getting your payment, but you're not trying to hear. And because see what people don't realize, Fred, is that the most real estate investors, they just see half the game, right? So they see the house as the asset, but to the bank, the house is the collateral and their asset is the note. And so what I like about your topic is, how do you diversify so you can play both sides of the
Yeah.
field, both sides of the game.
Exactly. Exactly. That's exactly right. For instance, I started out with investing in real estate. I love it. I think it's a great asset class, but don't let that be the only thing you do. It's like anything else. You might be big on stock trading or um, any other type of investment, cryptocurrency, um, but diversify, get into some different areas. That really is what gives you stability. And so, for someone that has been an active real estate investor for many, many years, was really drawn into notes by the idea of diversification, the ability to scale, and
Mm-hmm.
we can talk about that a little more if you like.
Mm-hmm. All right.
Um, and doing that, you can invest in notes all over the country. That's what we do. We buy nationwide. And so we're diversified not only geographically, but we're diversified across many, many different deals.
Mm.
And so that is goes a long way to add stability and, like I said earlier, the predictability of your cash flow.
Yeah, I think that, one of the things that we talk to our clients about is financial freedom, right? And
Mhm.
financial freedom is a capability. It's passive income greater than your expenses. And then, out of the let's say that there's four asset classes, but let's say the top three being business, real estate, and paper. What we're talking about, guys, I just want to give you context, is a paper strategy, right? The
Yeah.
note,
Yes,
and
this
that
is
you can,
absolutely.
give yourself a, maybe this is, a runway of 5 years, 7 years, where if you can do this, you could generate, you know, a good amount of money using passive income. So I don't know the time frame. So I don't want to pigeonhole you into a
Yeah.
question, but if they're looking to be, to kind of build well, let's go back to diversification, because the topic is kind of like how to diversify your portfolio with notes.
Mhm.
And so there, it's good. Well, I think it's good because you already said, because it generates cash flow. It's secured by real estate. Any other benefits to note investing is why they should be
Yeah.
looking at it as a asset class they should look at?
Yeah, absolutely. One thing that I love, for investing in real estate, right? One of the big strategies with that is that you make money when you buy. In other words, buy real estate at a discount.
Mm-hmm.
The better the discount, the better off you're going to do.
Mm-hmm.
And so sometimes you do that by buying in a down market where there's a lot of inventory, a lot for sale, or maybe you buy a property with a problem that needs work, it needs to be renovated, has title issues that you know how to solve. And so you can get that at a discount, given that there's work needed, right? And so that's a strategy, right? Buying at a discount. Well, in the note industry, it is customary that notes are sold at a discount from the amount owed. So there might be a note with $100,000 loan balance. Well, that note might trade for 95,000 or 90 or 80,000,
Mm-hmm.
depending on the characteristics of it and the risk profile. But you can buy that note and you have that higher loan balance
Mm-hmm.
greater than what you paid for it. And so if the loan gets paid off at some future date, it'll get paid off at the full loan balance. And now you have this upside that comes in. And so that is something that is a nice advantage
Mm-hmm.
to be able to do that. And how much is that discount? It varies. It varies on market conditions, supply and demand, like anything else, but it also varies on your risk tolerance. If you're able to buy a note that has a problem that you can solve, then you can negotiate a nice discount for doing that.
When you say a problem, I want to key on
Yeah.
that for a second. That means, for example, they're not paying it. It's not performing, right? So that the person may be behind, or what's a problem?
It, yeah, that there's so many areas. It could be that maybe the note is not being paid on or has a spotty payment history where it is being paid on, but there's some missed payments here and there, or they're not timely. But there's other problems as well. There might be a problem where, let's say, the note has a perfect payment history, but the value of the property went down and there's not a strong equity position anymore like there used to be.
Mm-hmm.
That's one scenario. What if there is some type of a title related issue, or the loan documents have a issue, they weren't drawn up properly? Well, that doesn't mean that the note's not being paid on. Absolutely, it's getting paid on, but you can correct an issue like that by working with through the title,
Mm-hmm.
correcting title defects, or correcting documentation defects. That you have to spend money to do
Yeah.
this. There's going to be legal expense and it takes time. But when you do that, you now solve the problem and serve the need for the marketplace and increase the value of the asset, because now you could correct this issue and it's now a year or two later. You did all the hard work. Now you could go and sell that note and
Mm-hmm.
it's worth more.
Mm-hmm.
So you created that value. And guess what? You were getting payments every month
Every month
all
while you're
along the
doing that.
way.
Yeah. Yeah. Money
Yeah.
follows value. Like we should
So
run
so
towards
those are, yeah.
problems, not away from them. So that's, yeah, that's good. Sorry to cut you off, Elvis.
Well, it comes down to your comfort level
Mm-hmm.
and your experience level, because that's not something I would recommend for a new investor
Right.
starting out.
Right.
But over time, as you grow and expand your knowledge and expertise, then you can look at taking on some of these more difficult scenarios and take advantage of those opportunities, which is nice.
Mm,
And that goes for any type of investing, right?
right.
Same the same conditions apply.
Let's talk about I'm trying to think of this the right order. So you tell me what's the best order. So because a lot of times people say, well, I don't have money, but they have a lot of money trapped in old qualified plans, health savings
Mhm.
accounts, that they don't realize that can be used for this type of thing. And then let's
Sure.
talk about scaling. So whichever order you think is better, let's go there.
Yeah, let's talk about capital. How can someone invest in notes, right?
Mm-hmm. Mm-hmm.
You can go out to the marketplace and buy individual notes using your cash that you have. You can use retirement account funds, which is, by the way, one of my favorite strategies, using self-directed retirement accounts.
Mm-hmm.
You could use cash value from a life insurance policy, which is another way, especially if your note pays a higher rate of return than the interest you're paying on a policy loan. It's a great strategy. You
Right.
have
We
that
love that. That's what
arbitrage.
we do here. That's right. So yes.
I yeah, that I love that. And so those are some of the different ways to fund that. I've seen investors I know that they sold a property. They got tired of managing it, or they said, hey, we're at a good point in the market, I want to sell and cash out. And so they would take the proceeds of that and buy some notes.
Mm,
And now they're happy with earning that cash flow. So there's a lot of different ways to do it. But like you mentioned, using retirement account funds and those tax advantage accounts, that's a real powerful strategy. And so I always love talking about that with investors, teaching about that, because it's something that I always encourage to, for anyone, see if that works for you, if that fits your financial situation and circumstances. Run it by your accountant, your CPA, see if it's something that you could do, you qualify, and do it, because it's a nice strategy. And when you earn higher rates of return where they're not subject to taxes on the profits, you're going to have some serious growth there.
right. Yeah, that's a good thing. It's looking at all of your assets. So we talk, Fred, a lot about optimizing what you already have. So a lot of times we have dead assets, or we have, people like right now, they're in accounts and their accounts are down 20-25%. But if they, speaking of diversification, could do something and just have see, I like notes in self-directed IRAs. I don't like
I
when
love
people
that.
talk about real estate and self-directed IRAs. I don't like that because I was talking to Tom Wheelwright one time, and we were at a conference, and he says, why would you take a tax favored asset and put it in a tax deferred asset, right? But
Yeah.
notes and that all day long, right? Because
Yeah.
you're gonna,
Notes generates tax liability, hands down. It
yeah.
does. And so that's why what you said is so true, because you can benefit from that tax treatment.
Mm-hmm.
I always say this, that if you're in business, you want to have some type of retirement vehicle set up. If you're working for someone else, you have a 401k account typically, and you contribute to that. But even if you're an entrepreneur or business owner, or not, you can still have an IRA. Even if you're working as an employee, you can still have an IRA on the side, and in self-direct that.
Mm-hmm.
And even better is Roth. I love Roth IRAs.
Mm-hmm.
Encourage people to look into that. And if you qualify, get one set up.
Mm-hmm.
Get one set up and learn how to use that, because it's a powerful tool. I always worry that one day the government is going to look at Roth IRAs as a target. We hear about it from time to time, and they may go away at some point. Who knows? But uh, I always talk about to everyone, get one set up, because if you have the account and that's something that gets taken away in the future, you're likely going to be grandfathered
Right.
in because you
Right.
have the account. And so that's of benefit. But it's a really powerful vehicle that I feel that not enough people use it to its fullest potential.
Yes. And especially if you're coming up. I mean, to me, if they qualify for insurance, it works better, but I think it's a tool. So if you're funding past the match, for example, in your
Mhm.
qualified plan, then to me, because qualified plans basically, people say defer, but the more accurate word is postpone. Okay, it's postpone taxes, right? So if you can put
Yeah.
that additional amount in a Roth, now you're getting it. And now if you can kind of use you have to get a true self-directed account, meaning that you do a letter of intent, and it's set up to buy real assets. A lot of people don't think they don't know what that is, and say, oh, I'm with such and such. I won't
Yeah.
name any names, right? And I can buy anything in their grid, but you can't buy a note, right?
Yeah.
And you
No,
got to
you
get a
you
proper
do
fund.
need to go to a self-directed
Yeah.
IRA custodian, and there's quite a few of them throughout the country,
Right.
but they're the ones that will allow you to have a retirement account, and now you can invest that in notes or
Yeah.
in real estate, or do private lending. I mean, there's so many strategies that people can pursue.
Yeah. For one of the things that we always tell people is that investing is not about buying something as much as it is becoming something, right? You got to become, like, you can learn how to do this. I mean, it's a little bit of work, but investing is work, right? To invest is, that's the short for investigate, right? To investigate means to invest means to cover fully. See, most people don't want to do that. Now, if you don't want to do that, that's where you can, learn how to do good due diligence and find a good operator that will help you, syndicate those deals. But
Yeah.
which I want to talk a little bit later, as much as you can share. And then but let's talk about, so now they're doing it, we found the money, they like the asset class. Now what do I do? How do I get in the game? um how do I, or if I'm doing it, how can I scale? I really like this. How do I scale this?
Well, there's a couple of ways, and it all comes down to how much time you have.
Mm,
Node investing, it's a serious business. It takes time and effort, and not everyone has that.
mm-hmm.
So that's something to think about. But absolutely reasonable for an investor to build up a portfolio of notes and get it well situated. You place the notes with a licensed loan servicer, so they handle a lot of the administrative and day-to-day details with
Mm-hmm.
that. And that's wonderful. Now, for other people, they might think, well, I like notes, I like the asset class, but I don't have time. I'm focused on my business,
Mm-hmm.
or I'm focused on my career that keeps me busy. And so for someone that doesn't have a lot of time, another option is to invest in a note fund.
Mm-hmm.
And what a note fund is it's similar to a real estate syndication, where the fund managers, they raise capital from investors. The investors are passive, fully passive, and the fund manager goes out to the secondary market with that pooled capital and buys notes in bulk quantity
Mm-hmm.
and manages them. And so what's nice about that is, like anything else, when you buy in quantity, in volume, you can negotiate better pricing. You have better access to assets. And for the investor, that that is part of the relationships that the fund managers have, and they can leverage that. But also, the investors benefit from the expertise, the experience,
Mm-hmm.
the relationships that the fund managers have, and so that's really nice. And so there's no right or wrong answer to this. It
Mm-hmm.
comes down to what's right for you and your lifestyle. And a lot of times, note investors start out by investing in a note fund because they're not sure, they're learning, and then after a few years, they want to go on their own and start investing in notes. And so that happens a lot as well.
Mm-hmm.
And so it really is something that for everyone, there's a place, there's a way to do it, and it's just a matter of talk to some different people,
Mm-hmm.
explore options, and see what is going to fit best for you and your lifestyle.
So I guess the notes get paid monthly. So whether it's a fund or you own them directly, then that's monthly cash flow.
Yeah, typically monthly. Most notes are written where payments are due each month. It doesn't have to be that way, but
Mm-hmm.
that's what's most common. Payments are due each month, and note funds pay out on different schedules. Each one defines the way they do it. Some pay monthly, some pay quarterly, some pay not until a date out into the future. There's all these different scenarios, so you just have to explore that and evaluate that to see what's in line with what you're looking for. But a
Right.
lot of investors are looking for monthly cash flow, and so that's what you're going to see most often.
Yeah, I mean, you can't eat equity. I think that you get bills every month, so you need to buy assets that send you a check every month,
Yeah,
and that
yeah,
that's the flow. That's it.
absolutely. Or why not have both, right? Have some. This goes back to the diversification.
Mm-hmm.
Have some investments where there's equity,
Mm-hmm.
and that's appreciating, and that's great. And then you have other investments that are strictly generating cash flow for you.
Right, and that's just because you're one of the things that Fred. Everybody listening to this is in business.
Yeah,
Because your household is a business. So, I always tell people we call it your personal economy. So you can't control the economy at large, but you can control your production and consumption as a family unit. So you've got to see yourself. You got inflows, you got outflows, and you have to manage that, just like you're a business.
yeah.
And most people don't do it. They don't manage
I
cash
love
flow.
that analogy.
Yeah, and so I try to get people to see that whether you think you're in business, you're in business, and you need to operate
You are.
accordingly. You are,
Yeah,
and
and you're the CEO
you're
of
the
that
CEO of your
business.
life. That's right,
Yeah.
and you have to know.
Think about this, Curtis, right? You hear about this in the news like every day, the economy this, the economy that. We can't control the economy. We can watch it, we can learn and watch and try to position ourselves for success given what's happening in the world, but you
Mm-hmm.
can't control it. You can't control the economy. You can't control the government. You can't control the president or who's in office or any of that stuff.
For sure.
But what you can control is your own personal economy, like you said, your business, your own finances, as well as what you're thinking about, as well as what you focus on and what you do. And so it's very important to be mindful about that. Don't get caught up in a lot of the media hype and shock and awe that comes from the news, because that's what it does, right? It's there to get eyeballs
Right. To distract. I
focusing their
mean, it's like
attention
I
on
tell
it.
people,
Yeah,
look, your did you I don't know where I read this at, but it's the news's job is not to inform, it's to startle, right?
yeah.
And sell advertising. If it bleeds, it leads.
It's
So
shock,
it's just a parade
shock
of
and
bad
awe.
news. You can't watch all that stuff. Even, some of the, whether you're right or left or whatever, both of them have an agenda, right? And so you got to have your
Yeah,
agenda. What are your goals? And what are you
right.
trying to
What
get
are your
done? What
goals?
are your goals? And so if
Exactly.
your goal is
When
cash flow, then you need to organize yourself to buy things that send you a check. And then there's appreciation. So as again, you're like building your portfolio of
Yeah,
so that what, because markets go up, they go down, they go sideways. So if you're running your business, you've got to talk to people like Fred. You've got to know how to pivot so that you can make money regardless of what's going on out there in the world, because you're paying attention. And so if you're watching, you need to A, protect yourself, and B, take advantage of opportunities that present themselves. So,
yep,
and because
exactly.
on the other side of crisis is opportunity. And so you got to see that and not get caught up in paralyzed. You're mentally paralyzed. You can't do anything because you're afraid that, oh, interest rates are up, I can't buy houses. Well, so what? You
Yeah.
need to buy. That's how
Oh,
good for you, I guess. If rates are high, is that better for you?
interest rates are going to go up. They're going to go down. It's important to keep in mind there's always a demand for lending, for loans. It doesn't matter what the interest rates are.
Yeah.
People will buy property because they need housing, and very few properties are bought in full as a full cash transaction.
Right.
Even the deals you hear about that someone says, yeah, I paid cash for it. Well, a lot of times that cash came from some financing against a different asset.
Right.
um, and so there's always a demand for lending, for loans, and new loans get originated every single day. And those loans then get taken and sold in the secondary market to other investors so that the originator can turn around and create new loans the next day. That's the cycle. It's the velocity of money. That's why notes are available in the marketplace. There's this whole secondary market where notes are bought and sold every single day. And so that's not going to go away. If interest rates change, it does impact the pricing and return, of course, but there's always opportunity, like you said. And for the savvy investor that's paying attention and watching and ready to take action when an opportunity comes up, you're going to do just fine.
Yeah. Yeah. And so again, that goes to becoming, you want to become a good investor. Fred, this is awesome. So how can they, well, let me ask you this before I say that. This is my catch-all, just in case I forgot anything. Is there anything I should have asked you that you want me to ask you that you want to bring out that I missed?
Yeah, absolutely. Here's something that I feel is so important, right? This podcast is all focused around investing and cash flow, but here's another type of investing, and I don't want anyone to overlook this. Um, one of my heroes, mentors, from here in the Philadelphia area is one of our founding fathers, Benjamin Franklin.
Mm-hmm.
And a concept that he talked about and left us with was that the idea that an investment in knowledge always pays the highest dividends.
Yep.
And that's so true. And it's a reminder to all of us, always be investing in yourself and your own education. And don't be afraid to spend some money traveling, even travel to a workshop or seminars that might be in another part of the country where you can go and learn about investing, learn about business skills that will help you. And the best part when you do that is think about who else shows up at those events. You're in a room full of like-minded investors or individuals, people interested in growing and furthering their education. So always look to learn and invest in yourself. And I always say, set up a budget line item in your own
Yes.
personal
Yes.
budget
Yep.
for your education each year. Put money aside for that and learn about new trends in your industry, learn about new strategies, or go sign up for a workshop on tax strategies, right? This is relevant to anyone that's in business. If
Mm-hmm.
you're in business, you want to set up your affairs so that you're maximized for tax efficiency. And so always pursue that.
Yeah, that's powerful. I hadn't talked about it as a line item, but and so it is deductible, first of all, right? As a tax
Yeah,
deductible,
it
but
is.
it's an I would look at it as an investment. I'm going to invest like a good number is like 10% of your income, 5 or 10% of your
Yeah,
income
you're
into your personal development because
investing
you'll
in
see it
yourself.
come back to you. I've just for me, I just got back from Nashville from an event with that's expanded my thinking, and I got another thing I'm going to next month. So we're constantly
Nice.
pouring. My wife used to talk about it, but she noticed when I would go, you go to another thing, but every year my income would go up from the thing because I'm a good implementer of something I
Yeah, a
learned out of
lot
there,
more
right?
than whatever you spend on it.
Yeah, oh, for sure.
Yeah, yeah,
And so you have to do that. So you can't because sometimes you have to pay to be in the right room with
with the
with
right
people with
people.
the right people and because you can't expand your own vision, so you have to get around people that think bigger, that know more than you. I always strive, Fred. I always tell people, look, I'm always trying to be the dumbest person in the room,
Mm,
right? So I'm always trying to get in new
sure.
rooms where I don't want to be the head person. That doesn't help me at all. And you got to get around people that stretch you, that you're getting new stuff and you're expanding your vision, and you can't go backwards. Once you do that, you know,
Exactly.
you can't go backwards. So, and this is an exciting space that I think that as you're looking to build wealth, you have to get your foundation down that we teach, practical wealth, the four five principles of personal finance. But when we get to principle 5, velocity, then you've got to investigate, right? Things you like that make sense for you and get around people that can help lead you down this path, right? And no
Yeah.
conference that'll lead you down this path. And just I'm sure there's a local something wherever you are as you're listening to this. But Fred, how could they follow you, find out more about what you're doing? I know you got a book out there, so tell them about what you got going on.
Yeah. Yeah, absolutely. So my book is called The Little Green Book of Note Investing. It's available on Amazon. And best way to connect with me is by visiting my website. It's at fredmoskowitz.com. And if you prefer an easier spelling for that, you can visit giftfromfred.com and it will take you right there. And I'd be happy to send out a special report that I have on note investing. If you register there, and if you prefer, if you like using your mobile device, you can text me as well by texting the keyword money to the phone number 215-461-4433, and then follow the prompts there. And that way we can be in touch. I always love networking and meeting new investors, learning about what you do. I think that this is such a diverse space, And so many people do different areas of investing. So it's really interesting. And it's always a great opportunity to learn, share knowledge, and develop and grow together.
Mhm. Absolutely. So we will put all those in the show notes, giftfromfred.com, text money, MONEY, to no, the keyword is money. So but 215-461-4433.
3-3.
Okay. And then in the message put money and then follow the prompts. And so
Yeah.
that way you can get in his world and find out about this. So guys, you got to do some research, figure out what you like. The whole goal of this show is to not tell you what to invest in. Here are opportunities that are out there. You got to do your due diligence, and Fred will walk you through that kind of stuff for what opportunities are out there for him. Do your homework. And then, if you're ready, willing and able, okay, then that this might be a good avenue for you. Fred, thank you so much. I'm glad we were both like local to the area, so we probably have to get up, have a cup of coffee one day. But
Yeah. Love that.
yeah, so thank you so much for being on the Practical Wealth Show and dropping wealth gems on our listeners. I'm
Thank you,
excited.
Curtis.
You're welcome.
Thank you for having me on. Yeah.
Yeah, my pleasure. So guys, go out there, make it a profitable day. And I'll see you next week. Tell if you like it, leave us a review, share it, help the algorithms, find out more about the Practical Wealth Show so we can get this message out there. Have a great day, everybody. Bye. Hey, are you interested in learning how to be your own bank? We say you can be a customer of the bank or you can be the bank. So I just want to recognize the sponsor of this show, my firm, Practical Wealth Solutions. And so we help people set up privatized banking systems so that we can get interest moving towards you rather than away from you. So if you want to set up your infinite banking policy up properly, right? We use properly structured dividend paying whole life as a place to store cash. And you want access to a coach that will show you how to integrate this into your investing, to expand your business, to protect your capital from market downturns, taxes, predators and creditors. What I want to do is I want you to go to practicalwealthsolutions.net, go to the bottom. We're going to send you a little mini course on banking, and then you can reach out to us. Or, if you already know you want to do it, you can go right to the set up a strategy session with one of the coaches, and we will get you on the path to be in the bank.